Bitcoin price recovered to within $45,000 after sliding below $44,000 as analysts indicated probable swings for the flagship cryptocurrency. The release of U.S. inflation rates seems to have had no effect on the king cryptocurrency. Bitcoin's price rose past a crucial barrier overnight Wednesday, reaching $45,300, before falling as the broader market dipped in early trades after U.S. markets opened. Over the last 24 hours, BTC/USD has moved in a range of $43.400 to $81.45.398.91, exhibiting high volatility. Trading volume has climbed by 21% to $28.8 billion, while the overall market cap is around $860.47 billion, leading in a 42% market dominance. As investors analyzed new U.S. inflation data, which came in at 7.5% year-over-year versus an expected 7.3%, the earlier decline took shape. Risky assets like crypto and equities have reacted negatively, with all eyes on the Federal Reserve's upcoming rate hike in March. Despite being 0.2% higher than predicted, rising inflation did not have the same favorable impact on risk assets like Bitcoin as it had in recent months. The S&P 500 fell 0.23%, the Nasdaq composite fell 0.18%, and the Dow Jones Industrial Average remained barely above the flat line. According to analysts, the Federal Reserve may now have additional motivation to begin raising interest rates sooner due to the speed of year-over-year price increases. Crypto trader and analyst Michael van de Poppe observed, the Consumer Price Index (CPI) results for the U.S. are coming in at 7.5% year-over-year, the expectations were 7.3% year-over-year. $DXY is shooting up and risk-on assets are dropping down like Bitcoin and equities. Likelihood that the Fed will start rate hikes in March. However, for economist Lyn Alden, it was cash savers who had been losing the most from inflation. She noted alongside a chart, official inflation currently has its biggest gap over short-term interest rates since 1951. People holding cash in a bank or T-bills over the past year lost over 7% of their purchasing power. Related article: Investors take refuge in Bitcoin as inflation rises. The Fed will be put to the test here, as they had hoped for a steady tightening cycle rather than a hasty tightening that would pay. The political pressure on the Biden administration and Democrats will increase as core inflation rises over the Fed's objective and real average hourly earnings fall. Although November is still a long way off, this inflation report shows that price hikes are everywhere, and there is rising opposition to new fiscal stimulus measures that would exacerbate pricing pressures. As investors predict that pricing pressures may be peaking just before the Fed's March policy meeting, U.S. stocks have regained most of their inflation-related losses. Given the rise in global bond yields, Bitcoin prices are holding up well. Bitcoin's optimal future environment is risk appetite, which may be tough to achieve until after the Fed's first couple of rate hikes. Institutional investors in Bitcoin are focusing on Treasuries because the momentum trade appears to be quite simple. For the short term, Bitcoin appears to be settling in between $40.00 and $50.00. Cameron Winklevoss, co-founder of Gemini, feels Bitcoin is still the best inflation hedge, corroborating thoughts from the crypto community and even mainstream investors.